So these are my thoughts on the real estate market in 2023. When I'm filming this is August of 2023. So what I've kind of seen was because I'm starting to look at single family homes again on Redfin and Zillow, and what I've kind of seen was that the supply is still very low, right? The supply is still low, and then the housing prices are a little bit stagnant because of the higher interest rates. But given the fact that there's still such low supply, I wouldn't be surprised that you're still kind of having to overbid on properties despite paying a higher interest rate, right? Um, so that what that kind of tells me is that if the Fed decides to drop the interest rates over the next year back to like 4% or 3%, like how it was during COVID, people are going to start overpaying for real estate again. So if you remember, like the housing prices soared during 2020, 2021 during COVID. During 2022, it still kind of went up, and then 2023, when interest rates, went up to 7%, it kind of started to flatline. It didn't necessarily go down; it just kind of felt like it flatlined, especially in California, and especially in kind of more high cost of living desirable markets like the Bay Area, Northern California, Southern California. So it just really was shocking to me when I look on like Redfin, Zillow, and just the amount of inventory is just so low. So what that kind of tells me is that there's low supply, still high demand. People still are going to overpay for real estate, despite a higher interest rate. So I think for me, given the higher interest rate, obviously it's going to be a lot more expensive when you have a 7-8% interest rate versus like a 3 to 4% interest rate. But if you can buy the real estate correctly, like you don't overpay for it, you're buying it into equity day one, and despite the high interest rate, if you just can kind of tough it out, and when interest rates drop, that's when you do a refinance. You can do a cash out refinance if you want to pull out some cash, but that's how you lower your monthly mortgage payment, and that's how you have your savings. So it really got me thinking where it might be worth it to invest in new construction single family homes, especially for me to live in, because when you buy, let's say, new construction in phase one, now let's say there's 4 phases, right? When you buy phase one, it's actually the cheapest because you get the deal of all the construction, and the builders just want to get rid of inventory to increase their cash position as well as decrease the loan amount that they have on their, probably their line of credit that they own. So, if you buy in phase one for, let's say, $800,000, by the time phase four is done in maybe a year and a half to 2 years, every each phase they start to sell at a higher and higher price. So it has baked in appreciation, right? Like for example, I bought my new construction in Alabama for like 260K, and that was probably phase three. And by the time phase four finished, it was already worth over $300,000. So I had a 10% increase. So if you can kind of come early, buy phase one, hold it for a few years, and by the time they're done with phase four, you would have a lot of natural appreciation just because they're selling the subsequent phases at a higher price, and based on the sales comps, it should give you appreciation as well. So you kind of want to be one of the first ones in. You can pick your lot that you have as well as have that baked in equity over time. And if you decide to sell it and it's a primary residence, you can defer a lot of that capital gains tax. So it's kind of a strategy that I'm thinking about doing for my next primary residence in California. And what's nice too is it's a brand new house, so it definitely looks nice. If you want to rent out rooms, it's definitely appealing to other people because it's brand new, and you just have that joy and experience of living in something brand new versus buying an older house, and it's not as nice, not as new. So I think right now it's a great time to buy new construction real estate. You can negotiate the sellers, the builders to buy down your interest rate. That's what a lot of people are doing, right? So if I'm at 7% and they're willing to give me 30, 50K seller repair credit, I can use that seller repair credit to buy down my interest rate to, maybe, 3 to 4%. So if you're willing to work with builders, like I said, they want to get rid of inventory as fast as possible to reduce their loan amount, and they just want a guaranteed win. So if you're very qualified, you have a good debt to income ratio, good W-2 job, like myself, then you have a lot of negotiating power, especially if you're like pre-approved with a lender, or if you use their lender, they'll definitely give you seller repair or repair credits to cover your closing costs, to buy down your interest rates. So that's, I think, kind of the way to go. Whether you're buying a primary residence or a investment property, is to really buy new construction and negotiate the builders to kind of get more favorable terms, whether it's price or whether it's a buy down. And then once interest rates drop, in maybe 3 years, then you can do a refinance again. So I think right now it's definitely the best time to do new construction. I think value add real estate right now is not as good, but if you have a long term outlook, you can't lose either way. So, that's kind of my strategy and thoughts. Given these high interest rates, like even if interest rates go up, that means that less people qualify for loans, which means that if you do qualify, then it kind of cuts out your competition for you. So, like I said, it's really nice if you have a high income W-2, if you have a low debt to income ratio, if your credit score is amazing, then at that point you have negotiating power. Like, you might be able to buy like the model homes in the community that has all the upgrades built in already, and that's how you negotiate, because sometimes they just want to get rid of the inventory and they're willing to work with you a bit. So that's kind of the tips I got from my aunt, who's a loan officer. Is like, she can negotiate a lot with these builders to buy down interest rate, to get concessions, to lower the price, because at the end of the day, they just want to get rid of it and get their profit margin, whatever that is, right? Like, I imagine the builders want maybe 10 to 20% profit margins, and if they have to kind of negotiate a bit, they're willing to do that for a guaranteed win, because there's so many more houses to develop. So overall, hopefully you found value from this video, and kind of get my thoughts in terms of the real estate market in August of 2023 in the high interest rate environment, and kind of what to do and mindset to have when buying real estate. Hope to see you in the next one. Thank you so much.